Let me acknowledge that our nation is still mourning and remembering the lives lost in Las Vegas. Our condolences go out to the families affected by this heinous crime, and our thanks go to the courageous first responders and police and citizens who put their lives on the line to save others. Two members of this committee, both of the senators of Nevada, are absent today because they are in Nevada. And I know that Senator Heller and Senator Cortez Masto are currently doing all they can there, and we will remain united in prayer and support with them during this difficult time. Today we're going to hear testimony from Wells Fargo Chief Executive Officer and President Tim Sloan. Welcome, Mr. Sloan. Just over a year ago, former Wells Fargo Chairman and Chief Executive Officer John Stumpf testified in front of this committee on the bank's fake account scandal and his handling of its fallout. Of the many issues emphasized by the committee members during that hearing, one was the need to hold executives accountable and to ensure that customers impacted would be made whole. Mr. Stumpf repeatedly committed that the bank would take necessary actions to make it right and to restore the public's and the investors' trust in the company. Incidents like these remind us of how critically important it is for companies to institute policies and procedures that foster customer protection, promptly identify and address problems, and treat customers fairly. Since that hearing, Wells Fargo has made changes to its corporate and managerial structure in an effort to address the concerns raised by this incident. However, new developments and the disclosures at the bank during the last year merit new scrutiny. On August 31, 2017, Wells Fargo announced the results of an expanded review of retail banking accounts, which included accounts opened between January 2009 and September 2016. The expanded review found the number of potentially unauthorized accounts was 3.5 million instead of 2.1 million. Separately, the company discovered problems with respect to its auto collateral protection insurance, or CPI program, and self-reported these issues to its regulators. In response to complaints, Wells Fargo received policies purchased on behalf of customers between 2012 and 2017 and found that up to 800,000 customers may have been harmed by Wells Fargo's CPI practices. The end result was that customers were charged for car insurance that they did not need, and some had their vehicles wrongfully repossessed. For families, having your car repossessed or credit compromised is devastating. These new developments raise a number of questions that Wells Fargo must answer, including, what has Wells Fargo done to ensure that customers affected by any of these issues are or will be made whole? In more complex cases where customers' credit scores were negatively affected, how is Wells Fargo working with other parties to restore those credit scores and return amounts in those instances where customers experienced higher borrowing costs? What structural and cultural changes has Wells Fargo made in the last year to address both past issues and new revelations? And what evidence is there that new policies and procedures are effective? And finally, as members asked last year, what has been the involvement of regulators since the initial incident, and in response to the new disclosures? We welcome your comments on these matters, Mr. Sloan. And before we get to the testimony, Senator Brown.
Thank you, Mr. Chairman. I echo your comments about the citizens of Las Vegas and those many visitors that also lost their lives, that were injured in that terrible shooting. Our hearts go out to all of them and their families. Special concern also to Senators Heller and Cortez Masto in this committee. I hope that after every tragedy, we always say our hearts and minds go out to those victims and their families. I hope that the United States Senate will actually do something about this for a change. A year ago, then Wells Fargo CEO John Stumpf sat in this hearing room attempting to explain the inexplicable. The bank's punitive sales goals had pressured its employees into opening over 2 million fraudulent checking and credit card accounts. In written follow-up questions for the record, committee Democrats asked Mr. Stumpf if he was confident that this type of fraudulent activity existed in no other part of Wells Fargo. We asked about a variety of products, including insurance. On November 15, 2016, Wells Fargo responded, quote, "We believe that the activity at issue here was limited to certain team members within the the community bank division, unquote. We've learned over the past year that the problems at Wells are much larger and more systemic than the bank originally disclosed. Before being forced to come clean by a multi-agency investigation, Wells Fargo went to great lengths to bury this scandal. It subjected customers to forced arbitration, preventing them from their day in court, further concealing the fraud. Employees, let me give examples. Employees who tried to alert senior management to the treatment of Wells Fargo customers were silenced or fired. 2013, a California customer sued, claiming Wells had opened several unauthorized accounts in his name. Wells Fargo forced that case out of the courts and into non-public arbitration, claiming that the terms of a real account should govern the fake ones. Think about that. Using forced arbitration, Wells forced that case out of the courts and into non-public arbitration, claiming that the terms of a real account should govern the fake ones. In 2015, another customer in California filed a class action against Wells for the same practices, and the bank, again, used its fine print legalese to fight to keep the case under seal, again using forced arbitration. Has the company changed? Just 2 months ago, Wells used its forced arbitration clause again to argue that it shouldn't have to pay customers it cheated on overdraft fees. In August of this year, Wells finally disclosed the number of fraudulent accounts was at least 3.5 million, 70% higher than it originally reported. The bank also revealed that it had stuck 800,000 customers with auto insurance policies, as Chairman Crapo said, without telling them or checking to see if they already had insurance. The bank was aware of these problems in its auto loan division in July 2016. Yet Wells' CEO told this committee that fraudulent sales practices were limited to the community bank. Mind you, this was not a casual response to a question that caught somebody off guard at a hearing. It was a written response that was undoubtedly approved by lawyers and others at the bank. Maybe even you, Mr. Sloan, were among those who saw the response before it was sent to Congress. A week after last year's hearing, the board of directors initiated its independent review of the company's sales practices. The report to the board, whose members, I might add, are paid an average of $370,000 for a part-time job, $370,000 to prepare for and attend several meetings a year, found that the fault lay elsewhere. That's cold comfort to the thousands of employees who make perhaps 1/10 of what these board members make, who were fired for failing to generate enough new accounts. The board chose to limit the scope of the review to the community bank, which is troubling. It should have known or should have wanted to know that additional problems existed in other divisions. The changes that Mr. Sloan and his team have made are not sufficient to reform a corporate culture that is willing to abuse its customers and its employees in an effort to pad its numbers and an effort to increase executive compensation. In light of the millions of Americans defrauded by Wells Fargo, the recent Equifax breach that compromised 145, number seems to be growing, 145 million Americans' personal financial information, and the SEC breach that led to insider trading, it's no wonder the public doesn't trust our financial system. We need strong rules to guard against abuses and forced arbitration in payday lending and debt collection and mortgage servicing and credit reporting accuracy. Rather than working to roll back consumer protections, as this committee seems to want to do, we should be supporting the Consumer Financial Protection Bureau. We should be supporting other financial watchdogs that stand up for hardworking Americans when big companies take advantage of them. Thank you, Mr. Chairman.
Thank you, Senator Brown. We will now proceed to testimony from Mr. Tim Sloan, the Chief Executive Officer and President of Wells Fargo and Company. Mr. Sloan, your written statement will be made a part of the record in its entirety, and you may proceed with your oral remarks.
Chairman Crapo, Ranking Member Brown, and members of the committee, my name is Tim Sloan, and I'm the CEO of Wells Fargo. I want to thank you for the invitation to this hearing on Wells Fargo 1 year later. This was a year of disappointment and transition at Wells Fargo. When my predecessor testified here last year, we hadn't fully grappled with the damage the sales practices scandal had done to our customers, our team members, and their trust in our bank. We recognized too late the full scope and seriousness of the problems in our community bank. We did not come to Congress with a good plan, and we deserved your criticism. But I heard you, and I heard our customers and our team members. I heard them loud and clear. You expect us to do better, and so do we. So let me be very clear. I am deeply sorry for letting down our customers and our team members. I apologize for the damage done to all the people who work and bank at this important American institution. When the challenges at Wells Fargo demanded decisive action, we acted too slowly and too incrementally. That was unacceptable. I also want to be clear about another thing. Wells Fargo is a better bank today than it was a year ago. And next year, Wells Fargo will be a better bank than it is today. That is because we've spent the past year determined to earn back the public's trust. Since I became CEO 11 months ago, my team and I have been focused on 3 tasks we're here to discuss today. First, in response to the sales practices problems announced in 2006, we are transforming our community bank. Our retail bank has a strong new leader. Oversight, compliance, and human resources are much more effective than a year ago and have far greater visibility and accountability across the entire company. We have revamped the incentives for our retail team members by eliminating product sales goals. Today, Wells Fargo rewards teamwork and excellent customer service, not just selling products. Our community bank is a fundamentally different organization from the one that existed in 2016. Second, we are reviewing operations and increasing accountability across the entire company. Now, when a concern emerges, we identify it quickly, we escalate it promptly, we disclose it appropriately, and we address it fully. We will demand individual executive accountability. We have clawed back $180 million in senior executive compensation, and we have fired senior retail, mortgage, and auto lending executives for not performing up to the standards our customers deserve. Third, we are compensating every customer who has suffered because Wells Fargo made mistakes. Last year, we reviewed 93 million accounts opened between 2011 and 2015. This year, we went back and took an even closer look at 165 million accounts opened between 2009 and 2016. Just as we expected, we found more accounts that should not have been opened. This was not new potential misconduct since last year. It all happened before 2017, but it is a very serious issue all the same, and we are completely committed to fixing it. Of the 3.5 million potentially unauthorized accounts, about 190,000 incurred $6 million in fees and charges. Wells Fargo is refunding every nickel, and we are paying $142 million to compensate all affected customers, including for increased borrowing costs from credit score impacts. Apart from these formal reimbursement mechanisms, I want to be very clear that Wells Fargo is committed to addressing any concern that any of our customers may have about an unwanted product or service, no matter where or when it may have occurred. If there is a problem, we want to hear about it. This past year has been humbling and challenging. My number one job as CEO is to make sure that nothing like this happens again at Wells Fargo. Fortunately, joining me in this big task are 270,000 outstanding Wells Fargo team members. I'm proud of their hard work and want to thank them for their commitment to making things right. I see improvement every day, and so do our team members. I think our customers have noticed the improvement too. I pledge to you that we will not stop until we restore our customers' trust and make Wells Fargo the finest and most ethical company it can be. Thank you again for the opportunity to address the committee. I look forward to your questions.
Thank you, Mr. Sloan. In our hearing last year, members of this committee asked many questions about how customers and consumers whose credit scores were impacted would be made whole. In cases where customers' credit scores were negatively affected, how is Wells Fargo working with other parties to restore those credit scores, and in cases where customers experienced higher borrowing costs, reimbursing those costs?
Chairman Crapo, we're doing that in a few ways. First and foremost, we went to the credit bureaus and provided the names of our customers whose accounts could have been inappropriately opened. Unfortunately, because of regulation, the credit bureaus couldn't provide us with the detail of those customers back to us. What we saw when we looked at that is about 40% of those customers had no use of the trade lines within a year, so their credit was not impacted. Of that remaining 60%, about 25% had no impact on their credit scores. We found that the median impact, the mean impact was about 4 points. But numbers are just numbers, because certainly more customers were impacted and some could have been impacted in credit scores by more than 4 points. So then what we did is we reached out to 43.5 million small business and consumers and said, if you have an issue, come into Wells Fargo and see us and we will make it right. Approximately 41,000 customers have come in based upon that. About half had credit-related issues, and we've made it right for those customers. In addition, as part of the $142 million settlement that I mentioned, the lion's share of those funds are going to go to customers whose credit score have been impacted. So we're going to be working with the experts that the attorneys for the class have provided. We're going to provide them with whatever information they want. We're reaching out to those 43 million customers again, as well as tens of millions of former customers, to make sure that they know about the class action settlement so that they can be made whole as part of that settlement for any credit impacts.
Thank you. And some of the actions required by regulators as a part of your September 2016 settlements include the establishment of a compliance committee, carrying out an enterprise-wide risk review of sales practice risk, and maintaining enterprise-wide sales practice risk management and oversight. What has been the involvement of regulators since the initial incident, including in response to the new disclosures about the increased amount of unauthorized accounts as well as the CPI issues?
Sure. We have an active dialogue with our regulators, the Federal Reserve, the OCC, and the CFPB, when we're talking about bank-related issues. So there's a tremendous amount of dialogue. For example, as it relates to the collateral protection or CPI issue, when that got escalated in the third quarter, we reported it to our regulators on a real-time basis, and we've been working with them not only to keep them apprised of those issues, but also in particular with the OCC, working with them to make sure that the remediation plan we had for any customer that was impacted by CPI is acceptable. As it relates to the fundamental changes that I've made since I've become CEO at our compliance, we've done the following things. First and foremost, we've centralized all of our enterprise risk and control activities. That was one of the failings that the report from the independent board of directors found, and we agree with that. So those have been centralized. We're hiring a new compliance officer. We've completed and devised a new compliance plan. We've created a conduct office in this centralized risk group that independently brings up and complaints, ethics line issues, any sort of team member turnover, so that we can connect the dots better than we did a year ago.
Senator Brown.
Thank you, Mr. Chairman. I don't think we have a good answer yet, Mr. Sloan, as to how and why this activity went on for so long at your bank. The company first blamed rogue employees who were trying to meet unrealistic sales goals, then blamed Kerry Tolstedt, the Senior Executive Vice President for Community Banking, who earned $9 million in 2015. Then finally, John Stump, the Chairman and CEO, who earned $19 million that year. You've been at Wells Fargo for a long time, 30 years. You've been COO, CFO, Chief Administrative Officer, head of the wholesale bank, which includes overseeing insurance. Was there no point, Mr. Sloan, prior to 2015 with the lawsuits and the terminations and the whistleblowers, was there no point that you saw a problem in the bank that required action?
Senator, that's incorrect. In fact, I've been very public, and I've made this statement on a number of occasions, and also it was a finding of the board's report that in 2013, when the sales practices issues were elevated to the operating committee, I sat on that operating committee, you're absolutely correct, in my role at that time as CFO, that it was elevated to that group. We took action, but in hindsight, Senator, we took action that was insufficient, as I said in my opening statement. And I'm angry about how we handled the problems historically. I'm disappointed in how we handled those, but the fundamental change that I've made since we've been CEO are addressing the failings that the board report pointed out, our regulators pointed out, and the mistakes that I saw in my prior roles. All right,
that's an answer, but as the CFO, as a longtime employee of that company, as having a strong, I understand, close relationship with Mr. Stump, it still perplexes me why your anger now or speaking out about it 4 years ago couldn't have had more impact. But let me turn to another issue. You've testified about how Wells has changed, but I think actions speak louder than words. For years, your bank used forced arbitration to hide cases where customers alleged fake accounts had been opened in their names. I mentioned in my opening statement the 2013 lawsuit, the 2015 lawsuit that Wells was able to squelch because of the forced arbitration clause. Not only did you use forced arbitration to keep the fraud hidden, that's what it did, but your bank's also taken the position that the fine print on a real account should apply to a fraudulent one. Though you've settled with some customers on that issue, your bank was still making that argument as recently as last month against customers in Utah. To top it off, in August, you asked a court to toss out a class action on a completely different scandal that also goes back several years, again, based on the forced arbitration clauses, the arbitration clause you force your customers to sign. Many of your competitors are starting to eliminate or have eliminated the practice of stopped the practice of forced arbitration. Would you commit to the committee today that Wells Fargo will quit using forced arbitration?
No, I won't, Senator. When I hear the word arbitration, what I hear is the word failing. And when we have to resort and have to have a conversation about with our customers about arbitration, it means that we don't have the right product, we haven't provided it in the right way, we haven't responded to their complaint, and we haven't made it right to them. So let me describe what we've done to change that. First and foremost, we're doing a thorough review of all of our products and services to make sure that they're the right products and services for our customers. In some situations, we have stopped providing certain products because we didn't believe that we could provide them in the appropriate way. Second, we're improving how we train our people and our team members to sell our products, to provide the right advice, to provide the right service. Third, when a customer comes in, we're trying to resolve the complaint completely. One important change that we've made in our community bank, and in my opening statement, I mentioned we've made fundamental changes at our community bank. Now when you come into one of our branches, one of our bankers or tellers doesn't say, I can't handle your problem, call this 800 number. We settle it right then and there. In addition to that, fourthly, as part of resolving the sales practices issues, we have expanded to a nationwide mediation. So we pay for a mediator to work on behalf of our customers. It's an independent mediator to work on behalf of our customers to resolve complaints. I'm happy to say that of the 43.5 million customers that we reached out to in the fourth quarter, those ones that came back.
I'm going to cut you off. I apologize because I wanted to follow up on that, and I appreciate the long, detailed answer, and I think it was made in good faith, but I also think that Forced arbitration clauses always give the advantage to the employer, to the bank, as we know. We know that. That's established fact. You're still going to use those forced arbitration clauses to take advantage of your customers, the way you did with the suits in 13 and 15, and the case against the customers in Utah. Why should we believe you're committed to changing your bank's practices and being fair to customers when you continue to use that behind closed doors arbitration system that clearly doesn't allow customers their day in court?
Senator, the reason is because I think we've made fundamental changes to the way that we do business, so it will limit the number of times that ever is. But
limit the number of times is good. I appreciate that, but give them their day in court. Those that you are not able to help or that you're not able to satisfy.
Senator, I look at the CFPB's own study, and the CFPB's own study said that arbitration is fast and efficient for consumers, and the CFPB's own study said that consumers have better returns, higher resolutions with institutions.
A selective reading of the CFPB study, but keep in mind where the CFPB ultimately came out on that question. Thank you, Mr. Chairman.
Senator Kennedy.
Thank you, Mr. Chairman. Good morning, Mr.
Good morning,
Sloan.
Senator.
Thank you for being here.
Thank you.
I like you, I believe in the free enterprise system. I think the free enterprise system has lifted more people out of poverty than all the social programs put together. I'm certainly not anti-business, quite the contrary. We all on this panel talk about the importance of jobs. I don't see how you can be for jobs if you're against business. But what I'm curious about is what in God's name were you thinking? I'm not against large. I'm happy when businesses are successful. I'm not against big. With all due respect, I'm against dumb. I'm against a business practice which has Wells Fargo first and customer second. I think it ought to be customer first and Wells Fargo second. I think that's better for the customer and better long-term for Wells Fargo. When did this start?
Well, Senator, I completely agree with you. Wells Fargo cannot be a successful American institution. We can't employ 270,000 of what I think are the best team members unless we put our customers first. And there is no question that in our community bank, we had an incentive plan that put selling products first as opposed to customers first.
Nothing wrong with that if it's good for the customer. But when did it start? When did it all start? You've investigated back to 2009, I believe.
Senator, no, the board of directors, the independent board of directors, members of the board, looked back as far as 2002, and that's where they found, and I agree with them, that they saw instances of inappropriate sales activity under that plan. Senator, we should have ended that plan years ago. We made a mistake. There's no question about that. We have ended that plan. We've rolled out a new incentive plan, to your point. In our community bank, that incentive plan rewards good customer service. It rewards providing products in the right risk way.
And Ms. Sloan, I appreciate that, and I'm really not trying to be rude.
Sure.
We just have a 5-minute limit, and our chairman enforces it pretty strictly, as he should. Can you tell me this? What's the total number right now of fake accounts you found?
Senator, in our review going back nearly 8 years to 2009,
yes,
we found that because we couldn't call 165 million people, what we did is we used a very conservative set of data metrics to look at, and it was done by the independent party.
And what did you come up with in terms of
there were potentially up to 3.5 million potentially unauthorized accounts.
And that's back to 2009.
That's correct.
Did you go back further than that?
Senator, we couldn't go back much further than that, and the reason we picked 2009, and that's when Wells Fargo and Wachovia came together.
Right.
So as we went back further than that, the data starts to deteriorate.
How much money did you make off of those 3.5 million fake accounts?
Well, again, Senator, they were potentially unauthorized. There were some legitimate accounts in that number, but let's assume that they were all inappropriate.
Yes.
We found 190,000 accounts that we charged fees, and that was approximately $6 million in total, and we've refunded that.
Okay. Was anybody's credit impacted?
Not for those deposit accounts, but for the potentially unauthorized credit card accounts, their credit could have been impacted, and we're in the process of working to correct that.
And you said you talked to the credit bureaus. Are they being cooperative?
Yes, they are.
You said they weren't giving you certain information?
Well, they can't. When we provide them information about customers, they can't provide us the detailed credit history without the customer's approval. So what they did is they gave us data without the customer name, so we could determine.
I thought you could buy it from them.
Pardon me?
I thought you could.
We can't buy it from them, but and that's why it's very important, and an important part of the $442 million settlement, that and that's really the linchpin of that entire settlement, is to make it right for their credit histories. And so that's how they're going to be able to get their credit histories fixed. In addition, if they come in to see us, of course we'll go ahead and do that.
Sure.
Right.
Thank you, Mr. Sloan. Thank you, Mr. Chairman.
Thank you. Senator Tester.
Thank you, Mr. Chairman. Thank you for being here today, Mr. Sloan. Let me just go through what we've learned over the last year. In September of 2016, we learned that 2.1 million Wells Fargo accounts had been fraudulently set up. Credit, checking, debit, unauthorized setting up. July 7 of 2017, we learned that Wells Fargo set up 800,000 auto insurance policies who didn't want or didn't need them. And then in August of 2017, we learned an additional 1.8 million, that's over and above the 2.1 million, 1.4 million accounts were set up for unknowing customers. If you add all those up, that brings the accounts to 4.3 million people, either fraudulent accounts or insurance companies, if my math is correct, and is correct. 4.3 million people, by the way, is over 4 times the population of the state of Montana. It's a pretty good sized chunk of folks. The chairman and ranking member of this committee, in their opening statements, basically asked you, what have you done that you can tell us today that has changed this culture? This isn't one person. This isn't tellers on the ground. This has been a culture. So what can you tell me concisely that you've done, and I know you've talked about, transforming your community banks, but what as CEO have you done, or the board or whatever, to ensure to us that we're not going to be back here next week or a month from now or a year from now talking about something else?
Senator, I can't promise you perfection, but I can promise you that we're working as hard as we can to get to near perfection. And that is, we're reviewing processes and procedures, turning over every stone. The first and foremost, what we had to do, and what you criticized us for last year, and you were absolutely right, is we had to have an executive team that took full responsibility for that. That was number one. Number two, we needed to reinforce that with our team. So we went out and we talked to our team and we asked them what they were concerned about. They were concerned about things like pay. They were concerned about things like escalation of issues. They were concerned about things like executive accountability. They were concerned about things like revamping our equity lines and things like that, or ethics lines, excuse me. The point is, we've listened to our team, and as you're listening to the team, that fundamentally changes the culture. And Senator, the proof of the pudding there is that our turnover is now down to its lowest level in 4.5 years. And in particular, it's down to its lowest level in our community bank, where we had our biggest issues.
Okay, so just to let you know, I hope this all works, because I think it's absolutely essential that it works. if we're doing this again 6 months from now, it's not going to be good. You talked about the things you've done, reviewing the customers and products, improving training, resolving problems. I talked about a nationwide mediator. Who pays for the nationwide mediator?
We do.
Who chooses them?
The customer does. If they're we just go to independent mediation service, and the customer can do it.
The customer is the one who makes the call onto the mediator.
Yeah. I mean, we provide them with a list of names. They can decide who they want to use, and we'll pay for it.
Okay. Let me talk a little bit about what the ranking member talked about, and that's forced arbitration. Is it true that you're using forced arbitration when it applies to a real account on fake accounts?
Senator, we've dealt with this issue with the $142 million settlement. We didn't waive our right to arbitration there, but what we did is we agreed to that settlement, and we said to our customers, come in to see us. We will make it right by them, and if you're not happy, we'll provide you with a mediator.
Jim, but that wasn't the question. The question is were you using forced arbitration from a real account and applying it to a fake account that was set up unauthorized?
There were instances historically that we did that.
Is
We're
that
not doing that
happening
right.
today?
We're not doing that today because we've addressed.
Will you commit
Yeah.
to not use forced arbitration on accounts that weren't set up without the authorization of the customer?
Senator, if there is a situation in which a customer
Yes or
is
no would work.
Yes.
You commit not to use that.
If we have set up an account, right, that was inappropriately set up or fraudulently set up without the customer, we're going to make it right by them.
And we're not going to use forced arbitration.
There's not going to be a reason to even have the conversation because we're going to make it right by that customer.
But Tim, let me point out that was being used 6 months ago. I think my staff whispered in my ear that they were using arbitration on fake accounts that was set up on real accounts.
Senator Tester, I completely appreciate your question, and we're not doing that.
Okay, and you're not going to do that.
If we have set up an account.
Okay,
right?
Tim, the only time I get in fights with folks who are talking is when they don't give me a yes or no answer when I really ask it. And the question is this, and you can ask it another way now, answer it another way if you want. But will you commit to not use forced arbitration on counts that were not authorized by the customer?
The easy answer for that, Senator, is yes, because we haven't done that. We're not doing that.
And you're not going to do it moving forward?
We're not doing that.
Okay. Thank you very much. I used more time I should. Thank you, Mr. Chairman.
Senator Scott.
Thank you, Mr. Chairman. Mr. Sloan, thank you for being here this morning.
Thank you, Senator.
Obviously, the entire Banking Committee is at least irritated by what we have uncovered and what you guys have discovered over time. And part of it is that if it's from 2011 to 2015, you had 2.1 million fraudulent accounts. And then you went back and did another search, and from 2009 to 2015, it's now a 70% increase. Were all those new accounts from 2009 to 2011, or did you miss some between 2011 and 2015?
The majority of the increase was in 2009 and 10, and then extending the period to September of 2016. But because we use an even more conservative view for the original time frame of 2011 through 2015, we did pick up a few additional counts.
So the vast majority of the 70% increase was 2009 to 2011 and 2015 to
2009.
So it was not within that period
Correct.
that you did the first.
So 2009, 2010, the first part of 2011, and then through 2016.
So 500,000 customers were enrolled in online bank payment, bill pay without consent. 800,000 customers were charged for auto insurance without their knowledge. How about homeowners, flood insurance, property insurance? Because having spent 15, 16 years in the insurance business, I will say that auto insurance is probably the lower tier of what banks actually engage in charging customers for not having proper insurance. Homeowners is a significantly higher percentage of folks typically find themselves being charged by the bank temporarily, and flood insurance is another area where you see that happen oftentimes. So are the numbers in the homeowners and the flood space just insignificant, or do you have a number for that?
We haven't found any issues there, Senator.
And here's my thought. If you have to come back in 6 months, which I think it might be good for you to come back in 6 months to have another opportunity for us to know what happened over the same time period more thoroughly. But my question is, if you haven't found any instances of inconsistencies in your other insurance-related services, that would be surprising from my perspective, having dealt with banks consistently for 20 years or so. How do you know that did you say you had 165 million customers?
No, we said we looked at 165 million accounts
165 million.
for that period. We have over 70 million customers. We serve 1 out of 3 U.S. households.
So we were talking about that. We didn't think it was 1 out of 2. So out of those 70 million customers, you're confident that 3.5 million is the final number?
Of potentially unauthorized accounts?
Yes.
Yes, Senator, I am.
Let me talk for a second about the corrosive culture that doesn't start at local retail locations. It doesn't start with tellers. A corrosive culture starts at the top, and then it seeps into the soil conditions, and then it germinates, and then folks feed off of that. How have you changed the corporate leadership and the corporate culture that will find itself in the soil conditions at retail locations?
So, Senator, first we looked at what caused the problems in our retail bank. First and foremost, the issue within our retail bank was that we had an incentive plan that drove an inappropriate sales culture. That incentive plan has been ended, and we've rolled out a new incentive plan. The feedback that we've gotten from our team since we've rolled back that plan, we've now had 2 full quarters, we'll get the results of the 3rd quarter, is that they're overwhelmingly very pleased with the plan. As we survey them, they're telling us that they like the new conditions at Wells Fargo. They're very happy. We've actually hired back and we've hired 17,000 new team members into our retail bank since September, since we've made these changes. Of those, 10%, or about 1,800, were team members that had worked in the retail bank that left because of the old culture there, or were dismissed because they didn't meet certain sales quotas. And to me, those folks coming back and agreeing to be part of the team reinforce that the changes that we're making in our community bank are taking hold.
That's good to hear that some folks want to come back. My thought is this, that your sales culture isn't driven by the sales products. I think Senator Rounds can attest to the fact, as another insurance guy, that ultimately it's not the sales goals. Mm-hmm. It's not the product selection. It's the people. And it's the people who are in management positions who put more pressure for results than an average person can get. And so if you haven't changed the people, it's quite difficult to change the culture.
I completely agree with you. That's why I named the new head of our community bank group, who I mentioned, Mary Mack, is doing an excellent job. She has gone through each one of the levels of management, right, and had everyone literally reapply for their jobs. We've reduced the number of managers to change the span of control. We eliminated a layer. But I agree with you. The issue was not just the incentive plan. It was that we created a culture of managers that only knew how to manage because of that plan. So getting rid of the plan, going through and making sure we had the best managers, and then now we're in the process of retraining everybody, starting at the top, the senior levels, before we get down to the folks in our branches. I completely agree with you.
Thank you, sir.
Thank you. Senator Warren.
Thank you, Mr. Chairman. Mr. Sloan, when you were named CEO after the fake account scandal, you were asked why a career as a Wells Fargo insider like you, why that made you the right person to fix the fundamental problems at the bank. And you said, quote, "Because I've been making change for 29 plus years at Wells Fargo." So I want to take a look at your time at Wells Fargo. From 2011 to 2014, the height of when Wells Fargo was cheating customers by opening fake accounts, you served as the chief financial officer. And as CFO, you spoke to potential Wells Fargo investors a lot. On those calls, you aggressively promoted Wells Fargo's ability to open up new accounts, didn't you?
No, I didn't.
No, you didn't?
No.
Well, here are the transcripts from all of the investor earnings calls that you participated in from 2011 to 2014. I've read through them. And on these calls, no one, not even John Stumpf, who was the CEO at the time, bragged more about Wells Fargo's ability and commitment to open new accounts for existing customers. In the April 2011 call, for example, I think I've marked that one, you said, I can't wait to get a credit card in every one of our credit-worthy customers' wallets. Nothing about whether your customers wanted or needed a Wells Fargo credit card. All that mattered was opening new accounts. So while you were bragging to investors about opening new accounts on these calls from 2011 to 2014, you also personally owned roughly 2 million shares of Wells Fargo stock. Is that right?
Senator, I don't recall how much stock I owned in Wells Fargo. I'm a very proud shareholder.
It's actually in your SEC filing.
Sure,
So
it's public.
if that's
all out there.
accurate, then 2 million shares. So it looks like you had a really good thing going. Talk up Wells Fargo's ability to open new accounts, get investors excited, and hey, if the stock goes up by $1, you make a cool $2 million. Then, in December 2013, almost 3 years into your time as CFO, the LA Times published a long article on the relentless pressure Wells Fargo put on employees to open new accounts. The article was based on a review of internal Wells Fargo documents, court filings, interviews with more than 30 current and former Wells Fargo employees. The article specifically said that employees had opened fake accounts in response to this pressure. Now, you were interviewed for that piece, Mr. Sloan, and you said, quote, I'm not aware of any overbearing sales culture. That is really interesting phrasing. I'm not aware of any problem. So when the LA Times came to you and showed you concrete evidence of a terrible problem with fake accounts at your bank, did you launch an investigation into the issue before brushing it off?
Senator, first, as it relates to my comments in 2011, I'm proud of the credit card products that we have at Wells Fargo.
That's not the question I'm asking. I just asked, you brushed it off. You said, I'm not aware of any problem. Did you open an investigation when someone laid out evidence of fake accounts?
Senator, that in that interview, to the best of my recollection with the LA Times, they didn't provide me with any information. It was soon after that, as I mentioned,
so
in
I take
2013.
that as a no. So
That's
when
correct,
you were asked
because
this
by that
question, you did not open an interview. You did not open an inquiry into it. Is that right?
Senator, again, the LA Times didn't provide me with any documentation.
So you had
it was
no
a phone
clue.
call.
All right.
After that time,
did you read the article?
I read the article, yes.
And then you opened an investigation immediately.
At the same time the article was coming out, that was the time when the community bank elevated this issue to the senior leadership
so
team.
let's talk
and that's
about
the
that
time that
time.
we began to take action.
Let's talk about that time. You didn't look into the fake accounts, but you went right back to pumping up the stock price by bragging about Wells Fargo's record number of new accounts on your very next investor call. Now let's forward to 2016, 2 months before the fake account scandal became public. You were then the chief operating officer of Wells Fargo. An interviewer asked you whether you thought the bank had pushed sales goals and cross-selling too far, and your answer was, quote, no. The fundamental strategy that we have is not going to change. That is July of 2016, just before this breaks open. According to Wells Fargo's own investigation, by July of 2016, You knew that thousands of employees had been fired for opening fake accounts and other sales violations. You knew aggressive cross-selling goals were to blame, and still, you publicly said the bank didn't have a problem, right?
Senator, that's incorrect.
You didn't say this? That you're
Senator,
quoted?
could you read the entire quote, and could we go through the entire presentation? Because I think in that, Senator, I think in that presentation,
whether or not
you'll
you
see.
pushed employees too far, your answer was no. The fundamental strategy that we have is not going to change. And that's a month
And I was referring to
before
the
this
vision.
breaks
I was
public.
referring to the vision of our company.
The vision,
Of our
including the
company.
fake scandals you were being asked
Senator,
about?
every time I give a presentation to our team members, I start with our vision, which is to ground people in the culture of our company, which is that our job is to satisfy our customers' financial needs and to help them succeed financially.
Sloan, I'm
That's the
glad-
context that I made that statement. Since I've become CEO, I've made fundamental changes to address the issues that we're talking about today.
Mr. Sloan, you were asked about pressure on employees, which caused the fake account scandal. We all know that now. It's public. You knew there was a problem, and when you were asked about it, you lied. This is about personal responsibility. Wells Fargo cheated millions of people for years. The Federal Reserve should remove all of the current board members who served during the fake account scam. And Mr. Sloan, you say you've been making changes at Wells Fargo for 30 years, but you enabled this fake account scam, you got rich off it, and then you tried to cover it up. At best, you were incompetent. At worst, you were complicit. And either way, you should be fired. Wells Fargo needs to start over, and that won't happen until the bank rids itself of people like you who led it into this crisis. Thank you, Mr. Chairman.
Mr. Chairman, could I respond to that?
Yes, you may.
Okay.
I want an equal amount of time.
Senator, a couple things. First, and I'll get to your criticism of me in a moment, but first let's talk about the board. I think the board has taken very important steps in terms of a thorough, independent investigation that's been made public. Right? That's number one. Number two, the board has taken very strong action in terms of executive accountability that is unfortunately some of the highest in corporate American history. Again, unfortunate. So I don't believe that your criticism of the board are accurate. As it relates to me, again, I think the reason that I'm the right person to run this company today, notwithstanding your criticism, is because I have been making change at this company for 30 years. I have made mistakes. I certainly haven't been perfect. But I think having that knowledge of the company, having the ability to make the change, the actions that I've taken since I become CEO 11 months ago have made fundamental change at this company. So I'm not afraid to make hard decisions when it's needed. And I have the support of 270,000 people. That's why I think I'm the right person.
Can I just make a short comment on this? I know we're over, but you really want to say, are you kidding? You know, look, you've been there for 30 years, and every one of my colleagues on both the Republican side and the Democratic side who've spoken so far have talked about a broken culture at Wells Fargo, have talked about the fact that the problem starts with leadership. The people who were there and leading Wells Fargo during the time of a years-long scam and multiple scams, as our chairman pointed out, those people should not be left in charge of this business. And when you promoted exactly what was wrong with this bank over and over and over, you went to the stock market and you bragged about it. You made money personally off it. When you were asked about it, you did not tell the truth, and you tried to cover it up. Wells Fargo is not going to change with you in charge.
Senator Rounds is next, and I do ask the senators to pay attention to the time limits.
Thank you, Mr. Chairman. I know that we're not supposed to be in the middle of this. We each normally get 5 minutes. So I'm just going to go back because I know that on some cases you don't get the opportunity to respond, but I think there was one area here that I want to hear your full response to it. And that is that you said that basically, as Senator Warren has indicated, that you wanted to see everybody with a credit card or at least all of your folks for the credit card. Would you please go into what you meant by that statement?
Well, sure. I mean, we're in the banking business, and one of the products that we provide to our customers is a credit card. And any one of our customers that comes in to see us that is interested in a credit card, we'd like to provide it to them. I'm proud of the hard work and effort of all of our team members that work in our credit card group. We've seen growth in that group because customers like using the product. I'm not embarrassed about that. Whatever adjective or adverbs are used to describe what I may have said or did and that are taken out of context isn't consistent with the fact that our job is to satisfy our customers' financial needs. If that financial need means they want a credit card, and if we have the right product, I'd love for them to have it. That's what we do.
Would you agree that there was a broken culture at Wells Fargo during this time?
Senator, I would agree that in our community bank, we had fundamental problems that created serious cultural issues. In terms of the rest of the company, there were other issues, but I wouldn't say that in the rest of the company it was a broken culture. Having said that, as CEO, and acknowledging that I've been there for 30 years, there are some that don't think I should be in this role. We've heard that today. And so what did we do as it relates to culture? We went out and we asked third parties to help us do new culture surveys to make sure that we weren't missing anything, because even though I've been there for 30 years and I've done things sometimes good and sometimes I've made mistakes, I don't want to be in a position where it's just what I think we should be doing. I want to make sure that we're listening to outside experts, we're listening to all of our stakeholders, and we're listening to our team members. So we're making fundamental changes in the company to address any sort of cultural weaknesses that we have.
One area that I think that we've got concern with in particular is Wells Fargo is, I want to make sure that members of the military, that they really do have some special legal protections under the Service Members Civil Relief Act, such as the protections to the soldier's credit or property when they're serving on active duty. And I want to go into this a bit. Can you please discuss some of the specific ways that Wells Fargo has tried to improve its compliance with the Service Members Civil Relief Act, particularly in light of the firm's sales practice issues? And can you go into this a little bit to give us some assurance that there have been changes made with regard to how service members are treated with regard to their credit activities?
Senator, we care about all of our customers, but I don't think there's any one customer group that we care more about than our servicemen and women. We created what we call a center of excellence that looks across the entire company to manage SCRA matters. That center of excellence is staffed with experts that only look at the ways in which we can provide the appropriate benefits to our servicemen and women. We work very closely with the Defense Department to make sure that we get on a daily basis updates from the Defense Department in terms of which servicemen and women, which of our customers are now on active duty. That puts them in a completely different category. And we're very proud of the fact that we've made significant improvements. We've had historical issues, Senators, no question about that, but we needed to make fundamental change to create a center of excellence, to staff it appropriately, and then to make sure that they're looking across the company. In addition to that, I'm very proud of the fact that we have 8,500 team members who were veterans. I've made a commitment as CEO that we want to hire up another 20,000 by 2020. In addition, we've provided financial education services to hundreds of thousands of servicemen and women so that they can manage their finances appropriately. And we have donated more than 300 homes free of charge to wounded veterans so that they can have a place to live.
You've used a third party to come back in and to do the analysis on the accounts and so forth, and to find accounts and to identify problems. Are you going to continue to use a third party to go back in and to double check in terms of whether or not the proposals that you've laid out and your intents are actually being followed through on?
Well, as it relates to the 165 million accounts and going back the additional 8 years, that's effectively what we did. We went back and double checked the prior period that we had disclosed and expanded that. We've put in additional policies and procedures in place right now to be able to address those issues. And those are independent of the business line. That was one of the issues we had before when there was an issue historically.
And my time has expired, but just, are you going to continue to use a third party to review in terms of due diligence to make sure that it's actually, that the changes are being made are actually being implemented?
We are bringing in third parties to look at various policies and procedures across the entire company, so the answer is yes.
Thank you. Thank you.
Thank you,
Mr.
Senator Schatz.
Thank you, Mr. Chairman. Mr. Sloan, the OCC has the statutory authority to revoke a national charter of a bank if the bank is found to violate the National Bank Act. Why shouldn't the OCC consider revoking your charter?
Senator, because we provide products and services to 1 out of 3 American households. We've talked about many mistakes that we've made, but today, we more oftentimes than not, we do that appropriately. The company is growing. The company provides jobs to 270,000 people.
So you're too big?
No, we're not too big at all. I'm just reinforcing that every day we have 270,000 team members that go out and satisfy
That sounds
the
like
needs.
what you said, is that the reason that your charter shouldn't at least be considered for revocation is the first thing out of your mouth was your size.
No, the first thing out of my mouth was our customers, that we serve 1 out of every 3 customers. We take that responsibility very seriously. When you look at the bank in totality today, we're doing many more things right than we are wrong, but I appreciate that today we're talking about Wells Fargo 1 year later and the changes that I've...
Sure. I'm sorry, I'm going to cut you
Sure,
off because I want to go 5 minutes only. That does sound to me like too big. I guess we'll allow the members of the panel and the audience to make a judgment about whether your answer sufficed. I'm not an expert in banking, so I want you to explain this to somebody back home. Mm-hmm. You made $21 billion in profits last year. You made a nice salary. I don't want to personalize this. Your board makes better than a nice amount of money. You were COO when a lot of this went down, and now you're CEO. So explain to the man on the street why this is fair.
Senator, I'm not 100% sure. I know what you mean by this, but let me...
you get a promotion. All the people in charge get lots and lots of money. Mm-hmm. And not all the consumers, but lots of consumers get harmed. So just explain to me in plain English why this is fair.
Senator, I've taken responsibility for the mistakes that have been made at the company. I'm taking action in my role as CEO to make Wells Fargo a better bank than it was a year ago. It'll be a better bank in the future. We're taking concrete action, and we're providing... I'm proud of the fact that our bank is the largest small business lender, the largest home lender. We make a difference to Americans every day.
Back to
you deserve...
Yeah.
You deserve the right...
I only have 2 more minutes. Sure. It just occurs to me that it's only in financial services, it's only in this industry where people can make such massive errors and there doesn't appear to be accountability. And only because of your size do we not understand totally which statutory tools, which regulatory tools, which consumer-based tools we have at our disposal to find a remedy. At a briefing for our staff, Wells Fargo representatives explained that the banks would make goodwill payments to customers who had their cars repossessed and their credit trashed as a result of auto insurance that you bought for them. As I understand it, the bank will designate a third-party claim administrator and ask customers to send in a form explaining how they were harmed and how much money they need to be made whole. According to your representatives, the claims are basically going to be paid up to $2,000, sort of no questions asked. So then my question is, why not just cut checks up to $2,000 for all of those impacted? Because the only reason I can think of putting the burden on consumers to ask for this goodwill money that you've already approved is that you're hoping many of them won't do it. So can I have your commitment to go ahead and presumptively push out the money rather than force people to figure out that they have this right and that they're likely to be approved up to $2,000, but they got to go through the paperwork. Can I have your commitment today?
No. What you have my commitment is that we are making the $500 goodwill payment to every one of those customers, whether they were impacted or not. And you have my commitment that we will make sure that we'll make it right for those customers to the extent they were impacted. If we need to do more than $2,000 to make it right, we will do that.
Can you please provide the committee with a list of all legislation that Wells Fargo has lobbied for or against since 2010?
We'll respond to whatever inquiry you'd like us to respond to,
That's my
Senator.
inquiry, if you could respond in writing for the committee. Thank you.
Thank you.
Senator Tillis.
Thank you, Mr. Chair. Mr. Sloan, thank you for being here. I just want to go back and make sure I've got the numbers right. I think the third party assessed 90 out of 93.5 million accounts that were opened that over about a 4.5-year look back, there were about 2.5 million that appear to be unauthorized. And an 8-year look back was 165 million accounts open. And I think that was about 3.5 million unauthorized.
Potentially unauthorized, Senator.
I got to go back because I want to talk more about how you focus on the customer and make this very easy for them to recover from. I serve on Veterans Affairs Committee, and I got a call from a veteran in North Carolina who had his wife was opening the mail, and she mentioned to her veteran husband, "Honey, I didn't know you were dead." The VA had sent a notice that he had somehow got miscategorized and he was deemed dead. Thought it was a simple problem, had his military ID card, called up the VA. The VA said, well, you've got reams of paperwork and several phone calls that you'll need to make to actually get reinstated and get your veterans benefits. Now, tell me how in making this right that I'm not getting on a phone, listening to elevator music, getting transferred to several different accounts. In other words, how are you minimizing the customer's time and getting this right? And then, and similarly, how are any effects on underlying credit reporting agencies being dealt with too as a part of getting this right? In other words, is it my problem to deal with maybe clearing up those accounts that I didn't authorize to an Equifax or through the credit agencies? Tell me a little bit about that process.
So in answer to your first question, Senator, in the fourth quarter, we reached out to 43.5 million customers via their statements and also by email, and we said something very simple. If there's anything about your accounts that you think isn't right, come in and see us, and we will make it right by you. And about 41,000 have come in to see us. Most of those situations have been resolved with the customer right there. To the extent that they're not pleased with what we've offered them free mediation services. Again, we pay for them, independent mediator, and we've addressed their issues. One of the other fundamental changes that we've made in the company since I became CEO is the customer service element within our branches. Historically, when a customer came in, we hadn't delegated the ability for a banker in one of our branches or a teller or a service manager to deal with it on the spot. We say, hey, great, you got an issue, call our 1-800 number. And that wasn't a very good customer experience, to your point. So under the new leadership of our new head of community bank, Mary Mack, what she has done is she's delegated that authority down to the branches so that when a customer comes in and they have an issue, we're trying to deal with as many of those as we can. In addition, we've increased staffing for our phone banker customer service as well as the customers that come in via online or via mobile. So we're trying to do a better job. I introduced 6 goals for our team in March, and the number one goal is that we want to provide the best customer service and advice in the industry. We've got work to do, Senator. I'd love to be able to tell you that we're number one right now, but we're not. But I'm going to make sure that we have enough resources.
What sort of so we're trying to figure out of the, I used the 93 million and 2 million potentially unauthorized, or 165 million, 3.5 potentially unauthorized, and then it's a fraction of those that actually incurred fees or any charges. Is that correct?
That's correct.
Okay, so for all the other ones, I just as a self-governing matter, I mean, I worked in the banking industry before I went into politics. You don't like opening up accounts that have no activity, because there's an inherent cost of operations that you're incurring. So, I mean, there's a natural, I'm trying to figure out where the circuit breaker didn't click and whether or not all those circuit breakers, in your opinion, have been fired. Yes, so that we're now trying to get to the governance issues that I have confidence that you would work on, and Wells Fargo would work on. But tell me just a little bit more about governance in my remaining 25 seconds.
Well, as it relates to governance for the entire company, the board engaged in an independent investigation. That's been made public. The board made some changes based upon that in terms of executive accountability, which totaled $180 million of compensation that was clawed back or not authorized. The board, there's a new CEO, that's me. We have an operating committee of which 5 of the 10 members now have new roles. We've taken the responsibility and the criticism in the board's independent report that said that management didn't provide information to the board in as well as we could have. I completely agree with that. We've revamped the way we've done that. So there have been a lot of governance changes, but most importantly, I think within the company, it's taking the enterprise risk control functions, human resources, compliance, credit, you name it, and centralizing all those so that we have a better check and balance between the business lines and risk, and then creating a conduct office in the risk function to be able to independently look at complaints and ethics lines, questions, and all kinds of things that would indicate that we have any issues in the company. I get those reports now, and that wasn't happening a year ago.
Senator Van Hollen.
I was listening to your response to Senator Tester about the issue of forced arbitration. Simple question. Who knows best what's in a customer's interest, Wells Fargo or your customer?
I think that it frequently is the customer, and that's why it's very important from my perspective to get it right so that we don't get to the point.
But if your customer knows best, why do you deny them the ability to go to court? Why do you require your customers, if they know best, to go to mandatory arbitration?
Senator, we don't do that for all of our products and services.
But why do you do it for some of them if your customer knows best?
Well, again, I think many.
It's a simple question. If your customer knows best, why do you deny them the opportunity to go to court? Why do you require arbitration?
Because, Senator, most of the independent studies, including the one that was done by the CFPB 2 years ago, indicate that it's better for the customer.
Mr. Chairman, if the customer makes a customer brings the case, right? Right? So if a customer decides it's in his or her best interest, forget about studies. We also know what the Consumer Financial Protection, what they recommended. They recommended that we get rid of forced arbitration. You said to Senator Tester that you were not applying forced arbitration with respect to the fake accounts. Remember that answer?
Yes, I did.
There's an article here, Monday, September 18th, 2017, just a short time ago, in a case in Utah. Wells Fargo lawyers have actually taken the position that the forced arbitration does apply to those fake accounts. Are you aware of that case?
I'm not familiar with that case, Senator. I apologize.
Well, let me read to you from a Reuters excerpt, and they reported this on September 18th, 2017. It says, in a motion on Monday, lawyers for Wells Fargo said consumers signed agreements to arbitrate disputes when they first opened their accounts at the bank, and those agreements also cover other accounts allegedly opened without their consent, end quote. That directly contradicts your testimony, Senator Tester, doesn't it?
Senator, I will look into
if
that
that
matter.
Is true,
Senator, I will look into that matter.
If that is true, it directly contradicts your testimony to this committee, doesn't it?
Senator, I will look into that matter.
I'm not asking you to look into it. I'm asking you to say, if that's true, doesn't that contradict your testimony today?
Senator, I'm not familiar with the facts of the situation, so I can't answer that question, but I'd be happy to look into it and respond to you.
Well, if it's true, it violates, it's in contradiction. I don't know if you were sworn in today or not, but it violates your earlier testimony. Let me ask you about your other overdraft fees scandal. When it comes to overdraft fee scandals, you are still exercising your right to deny customers the right to go to court. In other words, you're enforcing the arbitration agreement. Is that
Senator, I'm not familiar with the overdraft scandal that you're referring to.
the overdraft fees where you were charging customers fees on overdrafts of fake accounts?
Senator, we don't. We charge customers fees when they overdraw their accounts, but I'm not familiar with an overdraft scandal. If it relates to any unauthorized accounts that were potentially unauthorized accounts that could have been part of that $3.5 million, to the extent that there was any fees charged, we've already reimbursed those to the customers, so they've been made whole.
Well, apparently you're in a case in the 11th Circuit Court of Appeals. We'll follow up with you, but it looks like
Please.
You're also actually. How about the practice where you were selling auto insurance, right, to people who didn't ask for it or didn't want it? There was a situation, I think about 500 Marylanders or more, actually about 10,000 Marylanders were affected by that. 500 had their cars repossessed. It was actually the subject of a NPR radio story. Did you have a chance to hear that radio?
I didn't, Senator. I listened to NPR, but I didn't hear that.
I would encourage you to do that because one of my constituents came out to go to work one morning. His name was Michael Pfeiffer. He was heading out in February to his job in Maryland at a company that builds guitars. He walked to the place where he parked his car. It wasn't there. He called the police, said he was livid, said he thought someone stole his car. Turns out it wasn't a car thief at all. It was Wells Fargo repossessors. He was fiberglassed because his insurance was current. He went to Wells Fargo. The folks at the local branch said, this is nuts. You're covered. It took them, the employees of Wells Fargo, over 2.5 hours just to connect to folks in another branch. My question is very simple. If it takes the employees of Wells Fargo 2.5 hours to get in touch with others, if it takes individuals having to fight the system by themselves, don't you understand why it makes sense for people to be able to band together to file their claims against a big company like yours rather than have to fight you one by one?
Senator, what I understand is that if we make a mistake, we need to make it right, and we've got to improve our processes. What I'd like is, to the extent that Mr. Pfeiffer has not been made whole by us, I'd like to speak with him personally to make sure that we're handling the situation to his satisfaction if we made a mistake.
Well, Mr. Chairman, I would just point out that you said it yourself. You were informing your customers to know about class action settlements so they can be made whole. That is the way lots of people can be made whole at once. Mr. Pfeiffer's like one guy fighting Wells Fargo. I find it amazing that you would say your customers come first and then you deny them the choice of how they seek their compensation, how they seek justice. Thank you, Mr. Chairman.
Senator Perdue.
Thank you, Mr. Chair. Mr. Sloan, thank you for being here.
Thank you, Senator.
How many states does Wells operate today?
In all of them. 50.
Are you regulated in every one of those states?
Yes.
How many federal regulators do you have today?
Oh, gosh.
OCC, Federal Reserve, SEC, CFPB, is that correct?
And then in addition, we have securities regulators too.
So were you supervised during this period of time, 2011, 2016, were you supervised by the Federal Reserve?
Yes.
Did they, in their oversight, and I'm sure they were quite involved, did they reveal any material issues during that period of time?
Oh, they have, but that's confidential information that I can't disclose, but we have an active dialogue.
Relative to this breach of...
in terms of the retail account?
Yes.
No, they did not.
Were you supervised by the OCC during this period of time?
Yes.
Did that oversight reveal any material issues relating to this situation?
Yes, it did. And the prior comptroller of the currency, Mr. Curry, has testified to that.
Did the CFPB come up with anything during any material issues during this period of time?
Not to my knowledge.
And in dealing with these regulators, are there any outstanding issues today?
Oh,
relative to
sure,
this-
absolutely.
relative
You know,
to
I
this
have a
issue?
long to-do list. Yeah.
And how is the company reacting to that list of corrections?
We're listening. I mean, I think that
Well, but I'm sure you're implementing too, right?
and
The
well,
question I have
that's
is-
where I was going. We're listening to their concerns, and we are making fundamental changes. Not only because I think they make sense as CEO, but because our regulators also believe that there are other changes that we need to make, and we're being very responsive. I'm sure if they were here, they would say that we're not moving as quickly as they would like, which I appreciate that. But our commitment to fixing anything that's broken and making Wells Fargo the best bank in this country is sacrosanct from my perspective.
Right. Well, I think you would agree. We, in a private conversation, I mean, there's no way to sugarcoat this as a serious issue, and I appreciate your handling it the way you are. I want to get to the governance issue, though. You have an internal audit capability inside Wells Fargo today, right?
That's correct.
And as CFO, that was your responsibility. It's a sizable organization. Roughly how many people across the country are involved in that internal audit effort?
Oh, gosh. Well, first let me correct something.
Hundreds or?
Senator, the audit group is actually a separate, it reports separate from the finance organization because they have to audit the finance organization. So
To whom do they report?
The auditor, the chief auditor, David Julian, reports to me, but
To the
then has a
CEO.
direct reporting line also to our audit and examination committee.
Right. You also, your board has an external auditor as well.
That's correct, the
And
KPMG.
to whom does that external auditor report?
Well, they report to our shareholders.
Right.
And then they also provide independent reports to our board on our financial condition and other matters.
During this period of time when these indiscretions were occurring, did any report from either the internal audit capability or the external audit capability disclose any of these maladies?
The internal auditors did.
And how did-
Though I would say that was another area they could have done a better job, and I think David Julian, our chief auditor, has made fundamental changes there. But when it was reported to the senior leadership team, we should have taken more aggressive action.
Has any other breach of operation occurred that has not been made public yet?
Well, the minor breaches maybe, but that was one of the reasons why we went above and beyond the normal standard of materiality in our second quarter 10Q to provide an update on things like CPI, on gap insurance, on hard holds, on OFAC, on RMBS, a variety of different matters, because as I've encouraged our team, we need to make sure that we're more transparent to our stakeholders than we've ever been.
So going forward, has the scope of the internal audit function and the external audit function been expanded relative to this problem?
It has expanded, and it's been reorganized to reflect the reorganization that we've done within our company. I don't know the answer as to the number of folks from KPMG that cover us today, but my guess is there's more than there was a year ago and the year before.
Okay. Thank you, Mr. Chairman.
Thank you. Senator Heitkamp.
Thank you, Mr. Chairman. One of the most important things that we can accomplish here is to figure out whether we actually see and have a sense that there is a culture change at Wells, Mr. Sloan. And I have to tell you, I've been listening to the line of questioning, and I think anyone with an open mind would question whether we are actually seeing a culture change. So let me kind of run through this. Senator Warren asked you about the LA Times at the time that this story broke, and we can all acknowledge that the LA Times did had a huge role in this. And you said, well, you didn't have evidence about that, so you didn't really respond to it. But then once it became a bigger scandal, then we're going to fix it. So then we find out when we talk about it, well, we're going to fix it. We now realize that this is a problem and there's been mistakes made. And then we find out after we will fix it that there was knowledge of this problem years before the LA Times story, that upper management knew about this problem and thought that they had managed it and fixed it. They didn't fix it. Okay, then we fire employees who open fake accounts, saying they're the problem. It's this community bank problem. That's where the problem is. But you also fired those who refused to play the game. And we know that that happened because they have since participated in public discussions about how they tried to whistleblow on this. And then again, when we raise these issues, you say, trust us, we're fixing it. And they come before this hearing, it wasn't you, Mr. Sloan, but come before this body and say, wow, this is all you need to know. We now have turned the corner and it's all going to be okay, only then to have this insurance scandal exposed. But now we hear we're going to fix it. So, okay, I'm like, that's 3 times. I know a little bit about baseball. It seems like you strike out after 3 times of promising something you don't see. But what I want to say to you, because it goes back to your response to Senator Warren about the LA Times. In the course of just about 15 minutes here, you were told about an overdraft problem in the 11th Circuit. Now, if I ran an organization, I would know if I were in the 11th Circuit with a discussion on overdraft protection. But you said you were not familiar. That sounds familiar. Then you were asked about a legal position taken in Utah about arbitration, which was in the media. You said, I don't know about that. I would know about that if I were you. I would know about that if I were you, especially coming before this body. And then a national news story about Wells Fargo being involved in a wrongful repossession of a car, a news story that literally millions of people listen to, and you're not familiar with it. This is problematic for us because we need to see that there's actually a culture change, that there is a reaction to these kinds of consumer failures. And we don't really hear it here. What we hear a lot of is, don't know, look into it. We really care about the customer. Now, I would assume that where we are right now is a lot of soul searching at the highest ranks, of Wells Fargo. And correct me if I'm wrong, what I heard you keep saying is mistakes were made at the community bank, driven by wrongful incentives that were provided to the employees, right? I have not heard you say, other than taking responsibility for the incentives, I haven't heard you say mistakes were made at the highest level of Wells Fargo. I mean, we can say, yes, we've lost a CEO, and yes, there's been some punishment, and yes, we're moving over. But at the bottom line, I do not hear a level of culture change that satisfies me today. And I think that that is something that's very problematic for Wells Fargo going forward. Because I'm not familiar is not an answer we should be getting here. It should be, yes, we're aware of that, we're fixing it. And when we only hear I'm not familiar, we wonder what else we're not familiar. And I would caution you when you say, this is everything, that's what the last CEO told us. And then the insurance scandal broke. So, it's up to your board to figure out what they're going to do. But I hope you take these comments as constructive, because it's not helpful for you to say you're not familiar.
Senator, I appreciate your comments, and in my opening statement, I was very clear that we take responsibility. I was for the mistakes that we've made. And when I say we, I mean me. I'm the CEO of this company. The buck stops with me every day. I apologize that I'm not familiar with every matter, but to the extent that I'm not, right, we're going to follow up on all of those. As it relates to Senator Warren's comment, she asked me not if I was about the LA Times. She talked specifically about information that the LA Times provided and if I took any action. The LA Times didn't, in that interview, didn't provide me with any information, so I can't take action if the LA Times didn't provide. Having said that, we took action when that information got to the senior leadership team. I've taken responsibility for the fact that we didn't take aggressive enough action. That's why we're making the fundamental changes that we're making at Wells Fargo to make things right for our customers and our team members and all of our stakeholders. But having said that, Senator Heitkamp, I completely appreciate your frustration. I am angry about what happened at this company, and I pledge to you that we not only are we fixing it, but we will fix it.
I just want, once again, to point out that you cannot segregate the the top from the bottom. And it seems to me that when you say we didn't get any information from the LA Times, you shouldn't have had to have information from the LA Times. Should have read the story and said, is this true? Let's go find out.
And when we did, and we did.
Well, you knew it was true because you knew about this years before that.
No, Senator Heitkamp, I didn't. And the board actually conducted an independent investigation where they looked at millions of documents. They interviewed hundreds of people, and their conclusion was consistent with what I've said publicly here and elsewhere in the last year. And that is that the issues within the community bank were elevated to the leadership team, including me, in late 2013. We should have and could have taken more aggressive action. I apologize for that. We've taken that aggressive action right now to fix the things that are broken.
What year was the LA Times story?
2013.
Yeah. I think that we had a document from the last CEO going back to 2008, but I'll have to hunt it up. I don't have it in front of me. Thank you, Mr. Chairman.
Senator Cotton.
Thank you, Mr. Chairman. Mr. Sloan, welcome to the committee. Thank you for your appearance here today.
Thank you.
I appreciate our visit in my office last week as well, where we talked about some of the challenges that Wells Fargo has faced because of mistakes they made last year, not just for the customers, but for the tens of thousands of men and women that work in your branches all around the country, to include Arkansas, who are worried about the future of the company and what it means for their ability to put food on their kids' table and put a roof over their heads. One of the quickest ways that businesses can see an impact whenever they make a mistake like this or they display poor judgment is simply through competition, that your customers can go elsewhere. They can go to another bank. But one thing that Jamie Dimon has spoken about is the regulatory moat around big businesses that pardon me, as it becomes harder for smaller businesses to deal with the regulations that Washington has imposed upon them, that also gives, or it gives big businesses less incentives to be responsive and therefore less choice to consumers. You know, one good example of this is certain airlines that have mistreated their customers on occasions, yet there's really very few choices that you can go to if you want to fly from one city to the next. What kind of market reaction has Wells Fargo seen over the last year in terms of losing customers or going elsewhere, or at least pressure from other of your big competitors?
Well, Senator, I think the banking business in the U.S., and again, I've been involved in the business for 30 years, is very, very competitive. Big banks, medium-sized banks, small banks, non-banks provide customers with lots of opportunities for good products and services. There's no question that when, since last September, after the retail banking sales issues were announced, there was an impact on our business. But since then, because of the fundamental changes that we've made in the company, we're continuing to grow. We're not growing as fast as we were prior to last September, but we're on a good trajectory. And again, I think that's because we've taken responsibility, we've taken executive accounts responsibility, we've made changes in our products and services and our processes, and our customers are seeing that and they're reacting positively to that. We're not where we need to be, but we're making progress.
Okay. One of the things that's always seemed peculiar to me about the controversy over the fake accounts is that how few of them produced any revenue. So it's not just that they were fake, but Wells Fargo's sales incentives apparently was rewarding employees for accounts that didn't produce revenue and the client didn't even know about. It seems like some misaligned incentives.
Oh, I think
not even effective at cheating the system.
No, I think it was worse than misalignment, Senator. I think it was stupid.
Yeah. What were the incentives? I mean, if you're not even producing revenues from these accounts, why were they created in that way?
Our retail banking business was focused on growing the number of accounts. They were too focused on growing the number of accounts and incentive people for just doing that, as opposed to good products and services, growing relationships, doing it in the right way. It was, in hindsight, it was just stupid.
And so you've been on board now for a good bit of time to try to clean up everything. What do you think is the risk of the possible other misaligned incentives inside the organization, of which you're not yet aware?
Well, Senator, I think it's relatively low. Again, I can't promise perfection, but I've told our team we need to get as near to it as we can. And so what we've done is, as part of our agreements with our regulators, they appropriately said, hey, as part of these consent orders, you need to look at the incentive compensation structures across a number of your products. As CEO, I said, no, we're going to go beyond that. We're going to look at the incentive compensation system throughout the entire company, and we're not just going to do it ourselves. We're going to bring in third parties to do it independently and give reports not only to senior management, but give those reports to our regulators and give those reports to our board so that we're very transparent about it. And I'm pleased that they haven't found anything that's as serious as what we were doing, but we can't rest. We can never let something like this happen again.
I would agree with that. Finally, I just want to make a point. We've heard a lot about forced arbitration this morning in this conversation. This is in reference to the Consumer Finance Protection Bureau's new arbitration rule. I would say if we allow that rule to go into effect, we may not have forced arbitration, but we'll have forced class action lawsuits, because without arbitration as an option, then the arbitration system will essentially cease to exist. And I don't think we should be forcing consumers to fund the lawsuits of class action lawyers.
Senator Donnelly.
Thank you, Mr. Chairman. Mr. Sloan, you just mentioned that the buck stops with you and that you're going to make it right by American customers and American employees. I'm concerned by the outsourcing of call center jobs. And I've learned that Wells Fargo has eliminated several hundred jobs here in this country recently, and more in recent years. At the same time that you were letting these people go, you were adding on positions in the Philippines. How is that making it right by your people here that work for Wells Fargo?
Yeah. Senator, we employ 270,000 team members. About more than 90% are here in the U.S., and the reason for that is it's where most of our business is done in the U.S. About 95% of our revenues, our customers are here. We hire anywhere between 40 and 50,000 people here in the U.S., and currently we have 15,000 jobs that are open in the U.S. For example, in our retail banking business, since September of last year, since I became CEO, more or less, we've hired about 17,000 people. They're all here in the U.S.
Well, let me ask you this. Did you let people go that were working in the call center areas and add people in the Philippines to the same positions?
It's, Senator, we want to make sure that we're providing our products and services.
Well, that's an easy one. Did you let people go here in the States and then add people in the Philippines?
Senator, we did, and generally our track record is that we rehire somewhere between 70 and 80% of each of those folks into another job in Wells Fargo. They generally get a preferential treatment and review because we always have about 15,000 jobs that are open.
What happened to the other 20%?
Senator, I don't know exactly.
Would you make a commitment to figure out how you can get them back on the team?
Senator, I will make a commitment that we want to hire as many qualified team members as we can because we have 15,000 jobs that are open right now.
Every business wants to do that. What I'm asking you is for those 20% that you talked about that may have been let go but not rehired, if it's not for various other reasons, I mean, if they were doing their job right, would you commit to rehiring them? In another position.
If we have jobs that are open that they're qualified for, of course I'll commit to that.
Well, why would you, in the first place, send these jobs to the Philippines if they were being done here?
Because frequently, when we look at how to best serve our customers, it makes sense to have folks around the world so that we can continue to be working through a 24-hour day and not run a night shift, for example, somewhere. We think that that's an effective way to do.
Do you think Americans are not capable of working a night shift?
No.
I can show you a whole bunch of folks in my state who work night shifts.
Senator, I don't mean to be critical of anybody that works a night shift at all. I'm just saying that in terms of how to efficiently and effectively run our business, we want to make sure our people are in the right place. Again, Senator, we have over 250,000 team members
I got
that are
that. I
here
guess-
in the U.S. We love doing business in this country.
I guess what I would say to you is if the buck stops with you, I may be patriotic, I may be a flag waver, and I stand guilty of both of those. But I would put up your folks who are working in those jobs up against anybody anywhere else in the world. And now I just want to ask you about something else. In 2013, you said that you sat on the operating committee and you saw problems and you were concerned. And it was around 2015, Mr. Stumpf came to my office and was extolling the culture of the company. And I don't want to hold it to an exact date because it's 2015, 2016. If you were concerned in 2013, why didn't you stop it?
Senator, we did take efforts to address the issues, but in hindsight, right?
Did you know they were fake accounts in 2013?
No, I did not in 2013. And we should have and could have taken more aggressive action. For example, I think in hindsight, what we should have done is not ended that incentive compensation plan in our retail bank in the third quarter of last year. We should have ended it years earlier. We tried to deal with the issue, but we dealt with the issue incrementally. We didn't deal with the issue comprehensively, and for that, we take responsibility.
When you saw that in 2013, and you said, we've got problems here, this isn't working, did you mention that to the board? Did you tell them that we've got problems, that things are not the way they are, that things that you see are not the way they really are?
Senator, my recollection, which is consistent with the report of the independent investigation that the board did, is that those were escalated to the board in 2014 and 15. I think that's another area where management should have escalated that more quickly.
Did you escalate that to the board at that time, saying, hey, look, this is way out of control?
It was escalated by a number of senior leaders.
And the board chose not to take action?
The board was overseeing the actions that we were taking. We represented that we thought that they would address the issues. Again, Senator, in hindsight, we were wrong. And it made this, it lessened the issue so that the number of accounts, the number of team members impacted was declining. But that's not how we should have dealt with the issue. The way we should have dealt with the issue is to end it permanently. And we didn't deal with that in our community bank until we ended the incentive compensation plan and changed management last year. That was a mistake on our part, and it won't happen again.
Thank you, Mr. Chairman.
Thank you. 2 senators have asked for a second round, and so we will do that. We do have a few minutes left, and Senator Brown and Senator Warren have asked for a second round. I may choose to do one myself, but let's go to you.
Thank you, Mr. Chairman. In my opening, Mr. Sloan, I talked about Mr. Stumpf's testimony last year that this activity was limited to community banking division. The company, pure and simple, lied to this committee and lied to the public. The company recently disclosed it knew in July 2016 that customers had auto insurance policies added to their auto loans without their consent. About 800,000 customers, roughly the size of the state that Senator Rounds represents. Every day since you've become the head of Wells Fargo for the last 11 months, every day you've made a decision to not disclose this information to the public. Your company knew about the auto insurance policy when former CEO Mr. Stumpf testified. When did you first become aware of the forced place auto insurance policy, and why did you think it was okay to continue covering it up?
I don't think it was okay to cover it up, Senator Brown. In fact, when the issue was escalated to me in 2016, in late August, early September, I talked to our team about it, and we decided at that point in time to end and tell our vendor to quit providing that insurance to our customers, and that was effective at the end of September. We then created an internal group made up of business line experts, legal experts, our auditing function, to look at the matter. We brought in an independent law firm and an independent consulting firm to help us do a comprehensive and third-party review of the remediation. We got the results of their report in the first quarter of last year. We began to put together the remediation plan, and we disclosed that remediation plan in August, and we highlighted that, we disclosed the issue in August. We've described what our remediation plan is as it relates to those 570,000 customers. Those checks have begun to go out, and we reported that in our second quarter 10Q. So we haven't been covering it up.
Well, you didn't cover it up.
I'm sorry, Senator, could I make one more point? We disclosed that to our regulators in the third quarter of last year also.
But that it took you, the company, you personally, 8 months, you, the company, 13 months, to disclose such a violation of the public trust it just makes me incredulous. Let me move to something else. You've said several times that arbitration is better for consumers. How have consumers fared in arbitration with Wells on the average?
I don't have the answer to that, Senator.
Well, I do, and I have, and I'm surprised you don't. On average, the CFPB found consumers paid $7,700 in arbitration overall in arbitration cases. Other data says that Wells customers paid $11,000 on the average. So they brought you to arbitration, or you brought them to arbitration. On the average, consumers don't do very well in arbitration, suggesting that there's something wrong, and also suggesting that arbitration seems to work out well for Wells Fargo, not so well for your customers. So it's pretty troubling that you continue to dig in and say arbitration's better for customers, because it clearly isn't. Let me ask
Senator, could I give you an example of how we're changing the company to address
20 seconds,
those?
because I want to respect
Absolutely.
the chairman's 5 minutes.
Senator, one of the issues that we disclosed in the 10Q was rate lock extension fees for our customers. We're not waiting for our customers to want to arbitrate. What we're doing is we've said that, and I want to make this very clear, because this is going to come out in the next couple of days, so I might as well mention it in front of you all, and that is we're going to our customers and we're saying the following. If you have a complaint about a rate lock extension fee that you paid at Wells Fargo, we will remediate it.
Good.
We're going to contact 108,000 customers, and we're going to say the following.
There are some good things you're doing. I'm not saying you're not, but I am saying that on fundamental issues like continuing, Senator Cotton talked about for whatever, but he said optional. We're saying it's forced arbitration. It's not optional arbitration for so many of your customers. Last point, right before the scandal broke, CEO compensation at Wells Fargo increased from 19 to 21 million. You recently announced you'll be increasing the minimum pay for tellers from $12 to $13.50 an hour. So the CEO,
$13.50 to $17.10 an hour, depending upon where they're located. That's a 12% increase, and it's 80% above the federal minimum wage.
So the federal minimum wage is poverty wages plus. So the CEO was overseeing a mass fraud. He gets a compensation increase from $19 to $21 million a year, and tellers get a raise, making those tellers still eligible for taxpayer subsidies to subsidize your employees, subsidies of Medicaid and food stamps and Section 8 housing, perhaps an EITC. I mean, you fight class action from employees that didn't pay overtime. It just strikes us as hypocritical to be boasting about this minor increase. It matters to them. It does matter to them.
It does matter to them, Senator, and I think that's one of the reasons why
you defend wage theft. Your company's defending wage theft in court by fighting these overtime claims by your employees.
Senator, I'm very proud of the fact that we raised the base pay for our lowest paid team members. I think that's one of the reasons why our attrition has gone down, because what they're saying is that we're paying them fairly. In addition to the base pay, we provide a benefits package to those team members that averages between $6,000 and $8,000. We provide other benefits to them. What we're seeing is a team member base, particularly at the lower levels, that's very happy to work at Wells Fargo. And you have my commitment to continuing to make sure that those team members are paid in an appropriate way.
Senator Warren.
Thank you, Mr. Chairman. Mr. Sloan, since becoming CEO, you've said that your priority is rebuilding trust with your employees. At a company-wide meeting this past March, you told your employees, and I want to quote you, "Wells Fargo's mission has never been just about improving our bottom line. And then you went on to assure them that Wells Fargo's employees were the most important and valuable resource. Is that right?
Yes, I say that
Good.
often, Senator.
So 2 months after making those comments to your employees, you held an investor day where you and your team made your pitch to Wall Street investors, and you rolled out a new financial plan. And I'd like to submit a copy of that plan for the record, if I may, Mr.
Without objection.
Thank you. Now, I'm sure you're familiar with this presentation, Mr. Sloan. I've also given you a copy of it, too. On pages 26 and 27 of this presentation, you say that Wells Fargo will cut $4 billion in expenses, $2 billion by the end of 2018, another $2 billion by the end of 2019. That is a huge cut, an 8% reduction in non-interest expenses over just a 2-year period. Now, here are some of the ways you describe how you're going to achieve those cuts.
I'm sorry, Senator, could I just correct one thing you said? So it's not over a 2-year period. It's over about a 4-year period. That's number one. Number two, what we said is that the first $2 billion that we're going to be reducing, we're going to reinvest that back into the business, so it's not going to the bottom line for our shareholders.
Actually, let me just quote what you said to the investors.
Sure.
You said you were going to consolidating similar operations activities to provide better economies of scale.
So that Center of Excellence,
for example. Can I just read this, please?
Sure, I'm sorry.
Improving processes, including digital technology to automate manual processes, and outsourcing of certain non-differentiated capabilities. Now, that's a lot of corporate buzzwords, but consolidating, automating, and outsourcing sounds an awful lot like firing people. So, Mr. Sloan, given your statements about how much you value your employees, can you tell us today that you will not be firing any employees as part of this $4 billion cut?
I cannot.
Okay.
And the reason for that is, Senator, we have an obligation to run Wells Fargo.
That's all I need to know, because when I look at the numbers, it looks like to me you're going to end up firing tens of thousands of employees to be able to make these numbers. Compensation and benefits for employees by far are Wells Fargo's biggest expense.
There's about 60% of our total expenses,
right.
And we're proud of that, by the way, because...
And if we assume an 8% cut in those expenses, that means that you would fire more than 20,000 employees in the next few years. And here's the kicker for me, Mr. Sloan. After telling your employees in March that they were your most valuable resource and that Wells Fargo has, quote, never been just about improving our bottom line, I want to read you what Wells Fargo told Wall Street investors 2 months later in May. Quote, we expect an additional $2 billion in annual expense reductions by the end of 2019. These savings are projected to go to the bottom line.
That's correct. That's what I just said.
So you're literally telling Wall Street you're going to fire thousands of employees.
No, we didn't say that. Senator, you're using math to then...
yeah, I do use math.
Yeah, but you're using math inappropriately, Senator. That's not...
Inappropriately? By adding numbers?
No, you multiplied two different numbers and you applied it to people.
That kind of thing
no, Senator, you applied it to people.
I asked you, can you say you're not going to make these cuts by firing people? And you were very direct. You said, no, you can't make that promise.
I have a responsibility to the 270,000 team members to make sure that the company is in existence and successful year after year after year.
I've got one more thing I'd like to read from you, and that is, it's clear that you're going to knock out a lot of employees here, and it gets worse. At the same time you're planning to fire employees, you're promising to spend $11.5 billion in the next year buying back Wells Fargo stock. You've made this public announcement. You have that much extra money. So look, if you stick to your current plan, it's clear that Wells Fargo employees making $30,000 or $40,000 a year are going to get screwed, just like they got screwed in the fake account scandal before. It was executives who demanded new accounts be produced at all costs, but it was 5,300 frontline employees who paid for that with their jobs. And now that the fake account scandal has tanked Wells Fargo's reputation, Your way of pumping up the bottom line and keeping Wall Street investors happy is to slash costs by firing low-level employees. You know, what happens in these cases, Mr. Chairman, is in these corporate scandals, it's almost always the frontline workers who pay the price, not the executives. And the only way we're ever going to stop these scandals is to hold executives personally accountable, to fire the people who are responsible, and when they break the law, to march some of them out in handcuffs. And until we do that, these scandals are going to continue, and working people are going to continue to take the brunt of it. Thank you, Mr. Chairman.
Thank you, Senator.
Senator, could I respond to that?
Yes, as a matter of fact, I'm going to take my last word as the last questioning period here then, and I am interested in what your answer would be to Senator Warren's statements and the assertions that she makes.
Yeah, well, I couldn't disagree more with almost everything that Senator Warren said. I think it's inappropriate to take various statements out of context and multiply numbers and then apply them to people, because then what you're saying, you're scaring people, and that's inappropriate. When you look at Wells Fargo, I said, first and foremost, my commitment is to our 270,000 team members to make sure that they've got a safe place to do business in, to serve their customers, that they're paid fairly. And what those team members are saying to us, even in the midst of the fact that we have said that we need to become a more efficient organization, is they like working at the company because our attrition is down. It's down to its lowest levels in years, and that's because they appreciate the fundamental changes that we've made, many of which, but not all of which, that we've talked about. We care about our team members. That's why I spend a lot of my time going out and seeing them and talking to them and understanding how they're feeling about the company, and we're making changes based upon what they tell us. Every other month, I hold a town hall with 1,000, 2,000, 3,000 team members and ask them, unscripted, to give us suggestions. We've implemented lots of their suggestions. We care about them. But at the same time, I have an obligation as the CEO of this company to make sure that we keep other stakeholders happy, and that includes our shareholders, who aren't just Wall Street investors, but they're shareholders that are pension funds that support many retirees all across this company. 401k plans own our stock. We've got an obligation to them. So my job as CEO is to try to balance those appropriately, and I'm working as hard as I can to accomplish that.
All right. Well, thank you. And I want to just let our senators know that if they have additional questions, they are due by next Tuesday. And then, Mr. Sloan, we generally ask that the witnesses respond to those questions as quickly as they can. Not knowing how extensive those questions will be, we can't give a specific timeline to that, but we'd like to.
Senator, if you want to set a deadline for us right now, we'd be happy to live up to whatever deadline you'd like to set.
We generally ask them that the questions be responded to in 1 week from when they are received.
We will respond in 1 week.
All right. Without anything further, then, this hearing is adjourned.
Thank you.